Okay, folks, we are live and welcome to Sunday Night Futures Live. This is Bob Desmond, and what we're going to be talking about today are the opening futures action, and we will talk about the monthly charts. And we're going to leave it off with my favorite chart of the week. And not because it's a swing trade, I think it's a longer term investment. I'm going to give you an interesting reason as to why I like the stock. So let's begin with the opening futures action here. We'll kick it off with the E-minis, which are, for the most part, flat with a bias to the downside. Let's do what we normally do. Let's go to a 15-minute chart, and let's begin identifying significant higher highs and significant lower lows where we can get a vibe for, what we're going to do here overnight. And I'm going to just set alerts up at the most recent 15-minute higher price point and lower price point, at which that means that we will begin to either break out or break down. Now, it's Sunday night. It's going to be quiet for the most part. It's a slow headline weekend, not much out there. I'm always looking on Friday afternoons or Sunday nights for a bad news dump. Either a bank blowing up on Sunday nights, or after the bell on Friday, they'll do a news dump that could be negative for the market, but they do it on a Friday afternoon because it gives them 2 days before the markets reopen. So nothing like that. And we're going to let this settle down. We're seeing more sellers move in here. We have, by and large, this is a 15-minute chart. By and large, you can see how we're flipping back and forth between 90% and 77% sellers here. That just tells you when you flip 20 percentage points in a second, that means it's very thin volume and that anything could happen here. But by and large, it's net sellers out there, but that could change on a dime. Let's take a look at the NQ, the NASDAQ 100, the futures version of the triple Qs. Now, what's important to point out here is that Friday was not a good day. We saw a pretty negative day. We did drift off the lows of the morning on Friday, but it was more like a bear flag setup. And this holds true for the same on the S&P 500, which we just went over. And in fact, something interesting here, and I always talk about this, so a bit of real-time coaching is that when you get a breakdown, many times you'll get a retest of the breakdown point. Now, what we're looking at here is a bear flag setup. In my opinion, maybe it's not. In my opinion, it's a bear flag setup, and that I suspect we are probably going to break lower. What makes it a bear trap? It's this right here. It is the break below the lower band of support. And what we just did is we checked back, attempted to recapture, and were rejected. And much as like what you're seeing on the S&P 500, net sellers here. Again, it's early. Not a lot of headline news out there that could help drive the markets lower. So I'm not predicting an overnight major sell-off here. But at the open, the bias is clearly to the bear side. So let's do what we did on the S&P 500, and let's just set up some alerts. And we'll keep them kind of tight because it makes the show interesting. We only have an hour here. And sometimes we get into conversation, other things. One of these fire off, and it's like, oh my God, what's going on here? We check back in, and a lot of action is taking place. So let's check in now with the Russell 2000. Russell's down 0.20%. Now, the Russell has really behaved quite well these past few days. especially since the last Fed meeting, or I should say Jackson Hole. Jackson Hole. Now, we're going to be watching here on the Russell is that this is a potential 15-minute break. We're not there yet. We'll see if we close there. It's only 6:05. We'll set up an alert here. Do we put in higher highs? Or do we break to lower lows? That's what it's all about. Higher highs, bullish, lower lows, bearish. In a nutshell, that's what we do. We identify trends. Let's take a look at what else we want to take. EMD, small caps, mid caps, I should say, mid caps. I see the comments floating in here. I'll get to you folks in a jiffy, as they say. In the old days, jiffy. So we clearly have a break here. 15-minute trend. The question is, do we close? Actually, we already broke it. Now, what matters here, here's an interesting chart, is that we had a very nice rally on the mid caps, right? Nice rally. And then over here, this is always bullish to me, a higher low, a double bottom setup, right? So here's your pivot point. We should hold this point, and we're there right now. If we fail, I would call this a bull trap. More than likely, if we close down back into this trading range here, after putting in this nice consolidation, we'll retest this lower band of support. But man, if we break below the lows of, what day was this? This was last Friday? Yeah, last Friday. Warning flag on the track. You're probably going to see some algorithmic selling here, the computers. Let's check in with the 5-minute chart. Yeah, we have a 5-minute time frame, and I'm not a day trader, so this is 5-minute charts are by their very nature very volatile. But we've already closed down below that prior resistance level was support, now resistance yet again, as you could tell by this candlestick, failure to hold, recheck, rejection at prior support. And the bears are in control here, albeit on very light volume. Now, let's go to comments. Let's let everything settle down here. While we're watching the markets, I really want to focus in on the NQ, which is still holding in there. Not much change from the open. It's the small caps and the mid cap stocks that are under a bit of pressure. Let's go to comments and say hello. Lots of people. Lots of hellos. Mr. Pete, welcome. TZ Burton, welcome. Sean, thank you, my friend. Appreciate that. Would the Fed cut 50 basis points in September? We'll talk about that in a moment. We're going to be going over the Fed Watch tool. We'll see if that's changed at all. But there's a very strong probability the answer will be no. Jody, hello. Right on time tonight. Enoch, welcome. Jeff, thank you, sir. Appreciate that. George from Quebec, welcome. Lee Cable, even to you. Danny, welcome, my friend. Okay, let's get back to the futures action. Thanks for everyone to be here. Like, subscribe, you know the deal. All right. I want to check in with yields. Yeah, so the 10-year had a very bad week last week, which one might think is good, that longer-term interest rates are dropping. And, you know, there's reason to believe that is a good thing. It's good for housing. The only problem is that we had some negative economic data last week, most namely the jobs data, where you saw negative job growth in June. So those were revisions. So not good. So when you see this weak jobs data come out, yields tend to plunge because it's recessionary. Now, I'll talk to you in a moment about why this may reverse and move up higher this week, because we have a lot of data coming out. So stick around. Let's take a look at volatility. Volatility is down. So, one of the measures that I use when I take a look at the markets and I see that they're opening down or they're trading down, whenever, I take a look at the VIX. And if I have the VIX that's flat or down, I don't worry too much about the overall markets. If there was something to be afraid of, and you had the equity futures down, yet vol was up, you'd see it up, but it's not up. Nobody's buying protection right now. So you can say it's a complacent market, which it is. The however is a bug land in my glasses. The however is that it's not reflected thus yet in volatility. Let's take a look at the U.S. greenback. Now, the dollar has been showing some resiliency of late. I don't think that it lasts. Good open here. Let's go to the weekly chart. Excuse me, folks. I hate dirty glasses. So the dollar, which ultimately closed negative last week, has been very resilient. We're opening up here. I don't think that it's going to hold. I think that the euro yen trade is going to overwhelm the US dollar, especially if you have a case in front of the Supreme Court right now about the constitutionality of tariffs. I don't know who the plaintiff is. I don't know where they get that from, but maybe it's because you didn't go to Congress, meaning President Trump, to get authorization for the tariffs. I don't know. But if they side against the president in being able to institute tariffs, not good. We're gonna have to repay hundreds of billions of dollars in restitution. So the dollar on the week is opening up strong. The question is, how does it look week over week relative to the Japanese yen? I know a lot of you out there that are fairly new to trading, and you're saying, why does this matter to me? It matters because the weak US dollar is inflationary. It's inflationary. Now, the Japanese yen closed above support here in purple, but we're gapping lower at the open by about a half percentage point, just shy of that. So that explains the strength in the dollar. Let's go to the euro. The euro is opening down fractionally, but we have pretty good support here on the euro. Let's take a look at precious metals. So we have gold opening down. This is a gap lower by about a half percentage point. Nobody can be surprised at this. I mean, gold is vastly outperforming the S&P 500. I know a lot of people are out there. They don't want to know anything about gold. They don't want to know anything about gold mining stocks. I think it's a mistake. We've been long of these names for years, and will remain long of them. So I view this as an opportunity for those that are underweight. Get weighted on gold. Let's check out silver. Excuse me. Silver gapping lower as well. Let's go to a higher level view chart. I want to take a look at a 4-hour view. Looks like we're just basing here. Just basing. So I don't look too much into the opening price action of gold and silver here. Palladium, of which we are long, is moving lower by over 0.75%. So precious metals here this evening getting hit hard. PL, platinum, getting hit really hard. So it looks as though we're going to have a short-term correction in these names. Very short-term. Going on to energy. Let's take a look at crude, which had a horrible week last week. And I'll tell you, the fact that we're up here, I'm very surprised. OPEC is going to be adding more supply in the coming months. So that's not going to be good for the price of oil. But what it will be good for is or are the gold mining stocks. Why is that? The reason is that the number one input, the number one cost of mining gold is oil. So as oil goes down in price, the margins of unearthed gold, earthing it, goes up. Mining gold goes up. Natural gas, I booked profits on a swing trade here on Friday. I was getting a little bit nervous with the markets, and I wanted to lighten up a little bit and raise cash. And we also added to shorts last week for the first time in a while. So natural gas opening up here, fairly quiet, very quiet, in fact. I mean, usually natural gas opens up or down 1.5. I've seen it 7% moves in a single session. What else do we want to take a look at? LE, live cattle, weekly view, coming off of all-time record highs. This is a pretty bearish week last week. We'll see if we get follow through to the downside. Not much activity thus far. Let's check in with wheat. Broke out the week prior to last week, hammered. Corn has been trying to break out, no cigar thus far. Soybeans, weekly view, not a good close last week. I feel like I'm missing something. Crypto, yeah. XRP had an okay weekend, gapping up here. Bitcoin, gapping lower. This was up earlier today, now lower. Okay. Taco Trump quietly drops tariffs on key goods, admits U.S. needs imports, but in most cases, it's too late. Sorry about that noise. I just hit the mic. Was this a new headline coming out? I didn't see that headline. Let's see what we have here. I don't see anything. If you want to share that link, we'll talk about it. I don't see anything on Zero Hedge. Usually they're pretty good. Okay, so let's get to it. Let's talk about the week ahead. And we're going to go in a different order than what we ordinarily do. Now, I mentioned earlier that last week we added to short positions, raised cash on some longs. And the reason is simple, folks. I may be a technician, and I was joking around with a friend of mine, and he's saying you're known for technical really only, not much in terms of an appreciation of valuation. And I kind of took issue with that because I talk about valuations all the time. So I decided to begin this week off with valuations because price matters. Price matters. Any great investor out there has always concerned themselves with one thing, and that's price when they enter a trade. So, price in terms of Schiller PE ratio, the CAPE ratio, we're about 39 handle. We're the second most expensive since the dot-com era. The Buffett indicator, another metric, we're at all-time highs. We're at all-time highs in price to sales, price to book. Am I going to put on an aggressive long bet right now? No way. And I don't care if it's gold stocks, silver stocks. It doesn't matter to me because when this goes, and it will go, but everything will go down with the exception of potentially bonds and maybe the dollar. 10 years ago, 5 years ago, I said, oh, definitely the dollar's going to go up. Not anymore. I'm not that confident. So the Buffett indicator, we are very, very expensive. When it goes, everything is going to go. Why the gold stocks? Why the silver stocks? Forced liquidation. We are at record high margin debt. So when people have to cover those margin calls or they're forced to cover, the brokers don't care. They're going to sell whatever's liquid, and they're going to get rid of them. So everything suffers. Everything suffers in a major sell-off. So last week, we spoke about jobs coming out, and they did come out. I don't know how this got back up there. So here are the jobs numbers from last week. ADP employment missed by a mile. Initial jobless claims rose. This is a trend now, folks. It's clear, it's defined, it's up. Fast forward to Friday. Expectation for 75,000 new jobs in August. Actual 22,000. They revised down the prior couple of months. June, negative job losses. Wait till they revise this one. Average hourly earnings held steady. Now, for the worker, that's great. For the business, they hate that because the businesses are not doing all that well. Many businesses are not doing all that well, yet they had to pay rising wages. But the year over year actually ticked down by a fraction of a percentage point. So this coming week, let me go back here for a moment. Jobs impact, when you get negative jobs data, the probability of a Fed rate cut goes up. There's a flip side. When you get inflation data, which is coming out this week, you get the PPI, that's a producer price index. It's a measure of inflation at the producer level. That comes out on Wednesday. Core PPI, that also comes out same day. Thursday, we get consumer price index. That's the measure of inflation at the consumer level. Watch this one, core CPI year over year. This has been moving the market. It's the year over year metric, and that has been moving up even on the PCE index. So that's the one that the Federal Reserve watches. So right now, you're looking at a probability of a cut for September at 100%. Somebody asked earlier, what are the probabilities of a 50 basis point cut? I believe it was Larry. Right now, there's only a possibility of an 11% 50 basis point cut. Now, what may influence that? Well, if you get a drop in inflation this week, that could move the probability of a 50 basis point move up higher. if inflation comes in hotter than expected, then the market starts to say, Jesus, can they even afford to cut a quarter basis point? And if they can't, if that comes into question, them being able to cut, which they're going to cut, but for argument's sake, if there's a debate about whether or not they should cut by a quarter basis point, yet they're going to do it, well, what's going to happen to inflation? It's going to go up. And if they don't cut rates, jobs are going to get impacted. They are going to see rising unemployment. The Federal Reserve is between a rock and a hard place. More on jobs and the data. In terms of earnings coming out this week, a couple of big names. That's about it. Really quiet. Oracle. And then you get Adobe on Thursday. That's about it. And neither one could really rock the market one direction or the other, unless, of course, it was a horrific number. Now, I mentioned earlier that we had the first print of negative jobs since 2020 here in June. This is on the revision. Not enough is spoken about this. All job gains were part-time. So I want to go into this a bit more. So you have the report that comes out. Let's go back to last week for a second. And you get this number here. That's what you call the headline number. This is what the government likes to use. I just had an alert that fired off. Let's check in with that. NASDAQ has done a reversal here. I said that could happen. Let's see what's going on. NASDAQ now up, but no breakout yet. This is just another check back on that bear flag setup. So let's see if we can hold it now. We still have our alert above here. Let's raise that a little bit to here where we got some resistance that comes in. Okay. You can see how the sellers have dropped down. Now you have net buyers. Thin volume, though. All right, so this headline number here, 4.3%. The government loves this number because it's their number. They created it because it always hasn't been calculated the way it is now. Back in the 1970s, back in the 1980s, this number here, the underemployed were calculated in to this number. They're no longer counted in. Not only are the underemployed not counted in, those who dropped out of the workforce and are no longer looking for employment are no longer counted in. So the question then becomes, what is the real unemployment rate in this country? Stick around. So here is the headline number, the government's favorite number. This is what the media loves to spoon feed you. 4.3%, rah, 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 strong economic growth. Everything's wonderful. Everything is right with the world. But let's point out one thing here. Ever since here, December of 2022, the unemployment rate has moved up. Historically, still very low. Any read, this is the mainstream media, any read below 5% unemployment, that's considered full employment. So right now we're still at full employment according to the U3 number. This is the U3 number. This number here is this chart here, U3. There's another one they don't want you looking at. They don't want you knowing about it. Not many people talk about it. We will talk about it. The same people that put out this report also put out this report. This is the U6 number. No, it's not. Hold on. Do I have this backwards? I have it backwards. So I had it backwards. Sorry. This is the establishment report. This is the real unemployment report, unemployment rate. So August was 4.3%. Lines up here, right? Looks great. What's the real unemployment? Boom, 8.1% and rising. It's in an uptrend, higher lows, higher highs. And this includes these guys here, the underemployed, marginally attached to the workforce, or those not currently looking for work. They're reflected in this report. This is the reality of the jobs market. This is how they reported the unemployment rate back in the 70s, 80s. Not this nonsense. Just like they don't include coffee in the CPI nowadays because it's convenient for the government. This is the number that you need to watch. The U6 number. You can see it here in the address. I will share that out. Bookmark that. Revisit it from time to time because the trend is clear. It's up. And we're supposed to have a 3%. This is so crazy. We're supposed to have a 3% GDP. I don't believe that for a second. I don't know why, unless you're going to say it's AI. Okay, then maybe it's AI. I think I use AI. AI ain't ready for prime time yet. I'm telling you that right now. It's good at a lot of stuff. It is not perfect by any stretch of the imagination. Maybe my retail level of ChatGPT is the watered down version, and there's better out there. You know what? It's all about. You got to compare apples to apples. For my needs, which is basic charting, graphing for my business and whatnot, ChatGPT is very, very good, but it needs to be proofread. Now, if you scale out and you're going to pay $100,000 a month for your business for AI, yet you're going to be using far more complex calculations in your AI, well, you're going to have bugs there too. So it's not ready for prime time yet. So I don't believe that it's AI that's eroding this. I think that it has to do with the economy. You're seeing construction jobs get lost. You're seeing manufacturing jobs lost. You're seeing Lowe's, Home Depot earnings. Their same store sales are not as wonderful as they once were. Here, as a matter of fact, I forgot I had this up here. Construction spending fell 2.8% in July. Now, we hear a lot about the onshoring of industry. I'm sorry, it's not reflected whatsoever in construction spending. Maybe they're not building enough housing and they're making it up for in manufacturing. I don't know. We need to dig down into more detailed graphs here. But the overview of construction in the United States, it's declining. And that's not good. Those are jobs, lots of jobs. And office delinquency rates. This is really a mind boggler. Office delinquency rates in the United States are, back here during the financial crisis, the economy was in free fall. We are well beyond that now. That's in the rearview mirror. Something else just happened here. All right, so equities are beginning to firm up here, gain some steam. That was the E-minis that broke out. New session higher highs. So no bueno. And I want to talk about a little bit of analysis that I did earlier today. And I was looking at Google search terms that repeat themselves during times of consumer stress and then subsequently pressure on the equity markets. And one of those terms that I came across was canned food. People buy canned foods because it's cheaper than buying fresh foods. So canned food, when was that important? back here. You saw it spike, financial crisis, back here in a very big way in COVID. Now, we haven't seen a breakout yet here. This is just the United States. But one thing that's really concerning is that when you look worldwide here, take a look at this breakout on canned food. We are a stone's throw, well, you know, a little bit more than a stone's throw away from the COVID highs. We're challenging them right now. And before that was back here during the financial crisis. So watch out for these contrarian indicators because the markets send us signals and it's for us to ignore, right? This has repeated itself over and over again. So it's us to ignore. So I said, you know what? Let me take a look. Do we have opportunity in canned food? So I went over to my friends over at TrendSpider. I said to them, I said, let's bring up a scan. What did I pull up? Campbell's Soup. Campbell's Soup. One of my favorite stocks, not as a swing trade, but as a potential investment. Because on a price to book, price to sales basis, the stock is extremely inexpensive. In fact, I have it here. So here's price to book, multi-year lows, price to sales, multi-year lows, price to earnings, still kind of expensive. It's not a value stock based upon PE, but it pays over a 4.5% dividend. And many times a PE can be high relative to a turnaround in earnings. And they've cut a lot of expenses out of this company, and it's starting to get reflected in the share price. Now, we spoke about this stock. It was I didn't bring it up. It was one of our viewers that asked me to go over the chart. And I just kept in manual trend lines, and I was happy to see that that manual trend line happened to work out because we broke out. We did a retest here in July. This is a weekly chart. We put in higher lows, consolidated. Let's bring up our automated trend lines here. Let's take, you can see Stokes are rising. Volume was awesome last week. So I want to talk about volume for a moment. Volume on Campbell's Soup last week or the week before last was huge, but we really didn't go anywhere. We closed off the lows of the week, and then last week, talk about a bear trap. Bulls just surged through resistance as measured by these volume shelves. So Campbell's Soup is looking really, really good. And I'll do some analysis. I'll share with members later on this week about how Campbell's Soup performed during prior corrections in the equity market. So members, stick around. We'll go over that this coming week. If you're not currently a member, 14-day free trial offer. All right, let's go to the monthly charts. I have a bunch of requests to go over. I'm not going to go through all of the monthly charts, just the most important ones. CRB Commodity Index. Let me take a step back. Let me take a sip of water and step back here. All right. The reason why we're doing monthly charts is that we're now entering the second week of September. And we can now assess now how we closed out last month and now how are we doing in the subsequent month. So you could see that we moved up higher month over month. So we have a new monthly higher high. The problem is we couldn't hold it. Now maybe we rally and we close at the highs of the month. We have plenty of time left to do that. But as it stands right now, CRB Commodity Index under a bit of pressure. Too early in the month to go over volume. Yields. We spoke about this earlier. Bond yields are getting hammered so far on the month. This could change with the inflation data this coming week. If inflation data comes out hot this coming week, guess what? Long-term yields are going up. They're not going down. They're going to go up because the bond market is going to say, I'm not going to lend you 10-year money at 4.1%. Not doing it. I want more yield. So the bond vigilantes will head back into the bond market. Right now, they're willing to accept 4.1. That means they will. That does not mean they will be doing the same thing this time next week after all the inflation data. TLT broke out so far on the month. We'll be watching this very, very carefully. We have been in a very tight consolidation. We're going to be watching this to see whether or not we could close the month above, what's this high here? 88.11 on the TLT. If we do, that probably means that we have weakness in equities and money going into bonds. Tips. Can you say inflation without saying inflation? Yes. Look at the tips. Tips, new monthly higher highs. We are at the highs of the month. Overlaid here in gold is gold. You see what the markets are telling you. We have inflation. They're going to cut rates. At some point in time, another alert just fired off. Let's see what that is. It's probably the NASDAQ. Yeah, the NASDAQ just took out higher highs. The dollar, surprisingly holding up here. If inflation comes out hot and they cut rates, dollar is probably going to move lower, unless, of course, something catastrophic happens over in Europe and or Japan. Europe is going down the tubes right now. They have a lot of social problems over there, and totalitarianism is setting in a very, very big way. So you could see capital flight out of Europe in the coming months. Euro. Very strong. New monthly higher highs. Yen. Not doing anything. Bitcoin. Let's do a refresh here as it's trading at current. We're up on the month by over 2.5%. I prefer XRP, which we just began bull operations on a few weeks ago, right back here. I think that we're setting up for a higher low and we're getting ready for a move up higher. We will continue buying XRP. To a lesser extent, Bitcoin. I think Bitcoin's a little bit more extended. I still like it, own it, but XRP more attractive in terms of more upside potential and utilization. We're up nearly 3.5% on the month thus far. We'll take that. Now, volatility, monthly chart, no new monthly lower lows. In a situation like this, I just get my crayon out and I just do this. I don't do that. That was kind of a glitch. Let's try that again. Yeah, there's something wrong here. It's not letting me do it. I'm trying to draw a lower band of support. There we go. Okay. So we're holding support at current on volatility. Now, the longer this stays compressed like this, you get that breakout. It's going to be I just watched Fast Times at Ridgemont High the other day. It's going to be gnarly. Structure. So with members on Market Wrap, on the Week Ahead Commentary, we have been talking a lot about structure. You can have the equity markets moving up higher. Who cares? Who cares? What matters is the structure of the market, broad-based participation or not, because you could have the Mag 7 names grinding it out up higher, but if two of those names begin to break, owners of the other names begin to panic, and everything comes tumbling down. So right now, on the month, you still have okay broad-based participation on the NASDAQ. as reflected on the NASDAQ composite. The problem is that we put in new highs on the NASDAQ, yet new highs have not followed through on advances versus decliners. They are beginning to soften up here. Not horrific, but they are beginning to soften up. And when you take a look at the chart of the NASDAQ, the chart of the Mag 7, these are two utterly and completely different charts. NASDAQ has stalled out at the upper band of its rising uptrend channel, consistent with, although still a bearish divergence, with advances versus decliners, where the Mag 7 names have blown through the upper band of the rising uptrend channel like a hot knife through butter. At some point in time, you're going to get a reversion to the mean. And when you get that reversion to the mean, in all probability, NASDAQ comes down along with the Mag 7 names, and you get more decliners versus advances. Another way to take a look at this is when you take a look at the number of S&P 500 stocks trading above their 50-day moving average. This is in percentage terms, percent. You still have 60% of stocks trading above their 50-day moving average, but we're just shy of all-time highs. You should have 80% of stocks, if not more, trading above their 50-day moving average. We're beginning to see weakness, structural deterioration in the market. You don't want stocks trading down below their 50-day moving averages. Many fund managers won't buy them when they're down below their 50-day moving average. They won't do it. Yet last week we had, we're at lows not seen since 3 weeks ago. Now this is the NASDAQ. The number of stocks on the NASDAQ trading above their 50-day moving average. Look at where we're at. Here are the triple Qs. We're at the upper band of the rising uptrend channel. Yet, only 47 out of the 100 stocks on the QQQ or the NDX are trading above their 50-day moving average. Why? How do we get here? How does this happen? How could that be? Simple. Mag 7. These guys here dragging the entire NASDAQ and the S&P 500 up higher. Let's take a pause. Say hello to folks. Scott. Hello, Bob. It's Scott from Florida. Hey, Scott from Florida. Good show. Not trying to pump up, but open doors, but should have another good week for open. I remember you mentioned that last week. Wanted to add some good government's reverse. Yeah, I've been reading about that, and I'm not loving the idea of the government getting involved with a real estate crisis. That really harkens back to the financial crisis. All that means is they're going to lower lending criteria, and they're going to backstop those loans through Fannie and Freddie yet again through the federal government. We're on the hook. Our bonds are going to go like this because poor lending criteria. I know that's not what you're referencing here, so I'm going off into my own tangent. Real estate fuels everything, and it's best not to nip situation brewing early. You're very welcome, Scott. All right, Dow Transports, no new weekly lower low, no new weekly higher high. So not a big deal unless you're a believer of the Dow theory, where you have the Dow Jones Industrial Average. What's going on here? Nope, wrong one. The Dow Jones Industrial Average made new monthly higher highs. We're down now, but we did put in new higher highs. Yet the Dow Transports have failed to confirm it. And they failed to confirm for several months now. So the Dow theory is, as the Dow Jones makes new all-time highs, so should the Dow Transports. It's not happening. S&P 500, new all-time highs, new weekly higher highs. QQQ, we are below the rising lower band of support. We're flirting with an attempt to recapture. Uh, I don't know if we do it. I think that we could easily fade from here on the Nasdaq 100. I think that they're overvalued, and the next few weeks are probably going to be problematic for the Qs. Then you get seasonality going into November and into December that favors bulls, and then it's a coin flip January, February. Small caps performing well. Rate cuts are coming. Small caps tend to do very, very well. The banks, new monthly higher highs, but we faded off the highs. Technology, no new monthly higher highs. They are extended relative to the third standard deviation Bollinger Band. Doesn't mean they can't move up, though. Both third standard deviation Bollinger Band is in red. Discretionary names looking pretty goddamn good. Buy now, pay never. Salvaging this sector. Energy, not looking good at all. Early in the month, can they recover? Sure. But if we close where we're at or lower on the month, going into next month, avoid. Emerging markets. U.S. stocks are extremely expensive. When we first started talking about emerging market stocks, they were very, very cheap. They're no longer very, very cheap. They're less expensive than U.S. stocks, but on a historical basis, they're getting frothy. So be careful here with emerging markets. They're getting expensive. Even India here, this is yielding 13.22%. We've stalled out here. We stalled out a year ago. So I would be careful. Let's bring up Vietnam. Beautiful. This is expensive right now. I should say technically expensive. It's extended. Any shakeout here, you got to be a buyer of Vietnam. But you got to get a shakeout first. I would not buy it here. Crude oil. We've talked about this. Demand for crude, not good. That's not what you want to see. If the economy is strong, you want to see demand for crude. There's no demand. Good for the gold mining stocks. Natural gas. Stop going down. We booked our profits here. We have no position any longer. Gold, I mean, what's there to say? We struggled at 3,500. We are now well above it. Might we retest 3,500? Sure, I'd be a buyer because that 3,500 was resistance. It should now act as support. Here's gold year over year. Look at this bull market. Crazy. Crazy bull market here. Gold stocks. They're extended, but they could still go up higher. I don't want to sell. I mean, you look at it on a daily chart. They're getting up there. I would sell covered calls at this point, but I would not sell my position. Silver. We're getting ready to challenge all-time highs. That's up at 48.35. I think we still have a lot more upside here on silver. Once silver begins to outperform gold, that usually means that you're near a top. So we're going to be looking out for that. We're nowhere near that. We're in the early stages here of this rally in precious metals. So we remain very bullish longer term. But usually when you see silver outperform gold, that usually means that, you know, it's gone retail. The retail investor can't afford gold anymore. They're buying silver, and that's usually the top. You got to get out and look for risk assets. Silver miners just in fuego. Take a look at the performance here on the year. Silver miners, bananas, up 91%. Nobody's talking about these. We've known them for years. Nobody's talking about it. And the longer they don't talk about it, the longer the bull market. Everybody is ignoring these names right now. because they're not sexy. They're not NVIDIA. Good. All right, let's do some chart requests, and we will call it a night because my voice is beginning to go. All right, folks, this is going to be brought to you by our friends over at TrendSpider. Head on over, take advantage of my 35% discount code. They got all sorts. Let's go back here for a second. All sorts of AI going on this platform. I can't control this, but I'll show you in a second. Here, Sidekick. Cool stuff. So head on over, 35% discount code CON35, CON35 on YouTube, link above on Facebook and on Twitter. Take advantage of it. Automated trend lines. That is how I know that Campbell's Soup has probably put in the bottom and is going to go up, along with Google Trends. All right, let's take a look at members' requests. Let's go to it. We have multiple requests tonight for Mr. Sean. Let me go in order here. Let me go with Lester, Lulu. All right, so Lululemon, let's get rid of the automated trend lines. Lululemon is a basket case. I don't know how else to put it. Let's bring up my drawings again here. They reported earnings, no bueno. Let's first do this. Let's bring up, I'm trying to think about how to approach this best. Let's bring up fundamentals. All right, so their fundamentals have peaked out. Their revenues have peaked out. So the stock is stagnant in terms of fundamental growth. On a relative basis, you might be looking at the same, say it's still got 7.3% revenue growth and 8.7% revenue growth. That growth is slowing. They were at 28, they were 31, 28, 28, 30, but now the trend is starting to go in the opposite direction. So still a great company, and God bless Lululemon. When I go to the gym, I mean, God bless Lululemon. I think they've done a service for mankind. That being said, the stock on a fundamental basis is still good. Still a good company, very good company. It's just coming under a lot of pressure. Now, when we take a look at the automated trend lines, what are these here? Are these mine? Oh, these are the anchored VWAPs. Okay. So we're at the supply zone. In short, let's do this. All right. So at a value zone, I should say, rather than supply zone. Let's bring up the trend lines. You could see that we have support, which we closed at. We tested one support level, closed above another. If this goes, if we take out last week's lows, we could be coming down to 127 per share. So am I a buyer here? No, not yet. Let's go to a weekly daily chart. This chart here is very concerning. I mean, I think that we could rally this week, but I think that ultimately we get rejected at resistance levels and that we go lower. I think it's probably going to go measurably lower. If this market comes under pressure, you have the consumer that is dead. They're using buy now, pay never, or buy now, pay later. And that rooster is going to, well, chicken is going to go home to roost. That chicken is going to come home to roost. And when it does, luxury goods like this are going to take a nosedive. And I think this goes lower. I would avoid this right now. I wouldn't even sell puts at this point. CYBN. Let's take all this off. Let's see where we're at. Oh, nice reversal week last week. Okay. So the value of the automated trend lines. This is a daily view. I like to start with the weekly. We'll come back to the daily. So we're in a very tight wedge formation. We had broken out the week before last, failed to hold it this past week. I think that this breaks out. They have no comparative revenue to compare to. I'm not sure why that's not getting picked up, but warning flag on fundamentals. You have a lot of supply in here, a lot of overhead supply. Let's go back to that daily chart. Now, on the daily chart, you can see that we have resistance here in blue. I did not draw this. That's the automated trend lines. You're going to hit resistance here at around $6.82. Then a lot of resistance up at around $7.33. If we get above, this is exactly right. If we get above this 805 mark, we will have a lot of overhead supply that is now in the rear view mirror, and a lot of buyers will probably move in and take advantage of this breakout. So 805, 806 per share, I would be an aggressive buyer. Could you nibble here? Sure. Only on a close above 685 per share. And I think I'm kind of bullish on it. I think it goes up. AMD. So AMD got destroyed last week. So a bearish reversal bar on the week. You have some support in here at around 145. We're coming down to 146.33 AMD. If we close down below 137, which is the big support level it's got to hold, then we come down here to 127. I think that was my price target on Lululemon as well. So be careful here. We hit a lot of resistance. We are now getting rejected off of that. I think AMD goes lower. I'm not a buyer here. Wait for support to get hit. Oxy. Now, Oxy broke out the week of August the 25th. It held it last week. They're going to bring more supply on the market, but they've been saying that for a few months now. Yet, Oxy's been able to move up higher. So while last week was not a bullish week whatsoever, it was certainly bearish. But the key is that we held support. So by virtue of that fact, I think that we're just going to fall into a consolidation range here. And let's see how it plays out. If you continue to get headlines that they're going to cut production or raise production, yet Oxy goes up, oil goes up, then it's just fluff. Those OPEC guys, they screw each other over all the time. They make headlines. They say they're going to cut production or raise production. What do? The exact opposite. They stab each other in the back. So we'll see what happens. Price matters most. The headlines, a distant fifth in terms of the way we trade here. So watch the price action. Last week was ugly. Yes, it was down with oil. If the headline news continues to come out bearish, if the price holds and moves up higher, you got to buy the stock. But right now, not that bullish. Daily chart. Closed slightly below support on Friday, but it did rally off the lows of the day. Right now, you're looking for this as an investment. Dollar cost average in. No reason to go putting on big bets here whatsoever. CC for George. bullish. We broke out of a high value area. You're going to have resistance at around 1662. I would scratch the itch here. Once we break out and above this resistance level in green, drop back, do a retest, I would add more. Then when we make new higher highs, and in particular close above this resistance level here, which at current is at around 1837, I would finish my buying, but I would add in increments. I think it goes higher. Daily view. Bullish stuff. Good stuff. Soundhound. Markets are weak on Friday, and Soundhound was very strong. We closed at 1426. 1437 is a bit of a resistance area. I think we're going to break through it. A close above 1550 would have me buying aggressively, assuming that the market is moving up higher as well. Remember, though, when I talk about this, I'm not talking about a longer-term investment to put on a big position. I'm talking about a short-term swing trade. And you got to know your exit strategy because we know the valuations. Here are the valuations. I don't make this up. Strongly overvalued. So you got to be careful that when the tide goes out, that you don't go out with it. With it, you need to stop out. But right now, Soundhound is looking very, very good, holding up well. And the small caps, a small cap name, mid cap name, they tend to do well in a declining interest rate environment. Whenever I see this symbol PAAS, I always think of the Easter egg coloring kits when you're a kid. Remember that? So here's a weekly chart. Let's take my spaghetti off. So we're retesting support levels. We had a really nice bullish reversal bar here the week of the 25th. We undercut that last week. So the trade here is very simple. If you like it, buy a couple of shares, maybe 5% of your intended allotment. Add more on this is a weekly chart, good, yeah. Add more on a close above 1776. Add more on a close above 1845. Finish your position off. I wouldn't say here's a great number. I like 2042 better, and that would finish off my buying. I think you could be seeing a higher low get put in here, but this stock has been in a consolidation. It's got to earn the right for your investment dollar. I would wait for the breakout and for those resistance levels to get retaken, and that's how I would build on the trade. Daily view. Not great on the daily view. If you're going to put on that position, stay very, very small. We broke support on Friday. Very, very small. I think I had one more. I have ACI from Michael Anthony. Albertsons. This isn't a downtrend channel, Michael. You don't want to touch this right now. You do have support immediately below. We tapped it. If you break out on a weekly time frame, I'll give you this. I don't know if you have TrendSpider or not. Set it up the way I have it. Watch for a breakout above. You're welcome, Sean. Watch for a breakout above that dotted white line. You may be able to set up a consolidation range there. You might have a higher low, but I wouldn't get aggressively long until you close above 23.25, because that's your pivot point up there, right? So here's your on a higher low. It's a W formation, right? Left side of your W, pivot point, the center of your W, right side. Questionable about whether or not we take out lows or proceed up higher. That's where you're at right now. So once we begin to take out these prior highs, that's what bull market's all about. Higher lows, higher highs. Simple. You just don't have that yet. You're in no man's land right now. So stay small. I know there was another one. Unless he repeated it. CDE for Larry C. Can never forget Larry. CDE. Woo! Yeah. What can you say? Here, this is exactly what I was talking about. Let's get all these trend lines off. Let's get the indicators off. Here. Forget all the indicators. If you're bullish, are you putting in higher lows and higher highs? Simple as that. So here is your consolidation. Here's your higher low. Then look what happened after we broke out to new higher highs. Rip your face off rally. Now, is it extended? Yeah, it's extended. Doesn't mean it can't go up higher. On a Fibonacci retracement, you're looking at support at $10.46. If you're very bullish and you want to get in before that, I would look to be buying the stock on any pullback. And it may never get there, to be honest with you. 11.20 down to 10.46. May never get there in this bull cycle. Eventually, it'll be back down there again because these are cyclical plays. So in this bull cycle, you may never see these levels again. But if you get a pullback, I would be looking at 11.28 down to 10.46. And that's it, folks. Thanks, everyone. Don't forget about TrendSpider, CON35 discount code, link below on YouTube, link above on Twitter and Facebook. Everybody have a profitable trading week. I'll talk to you soon. Be well.